Welcome everyone to today's episode. So we are talking about UK's unemployment insurance void. In the UK, most families have little in savings and almost no safety net if they suddenly lose their income. Illness may feel like a bigger risk, but unemployment can be just as devastating. The reality is that protection like this is hard to come by. So to unpack why this gap exists and what can be done about it, I'm joined by Kesh, co-founder of Best Insurance. Kesh, introduce yourself and what Best Insurance does for us.
Thank you, Kiruba. A co-founder, Best Insurance, and we've been going for about 15 years now. Best Insurance is one of the UK's largest providers of unemployment insurance. We work with a variety of insurers. We take the responsibility and the role of designing new products. First of all, understanding the market gaps. We work with leading insurers. We work in joint conjunction with them as a joint product manufacturer. So we design the products, we design the pricing, the policy wordings, we understand what distribution it must have. And once the product is launched, we obviously constantly review it to make sure that it's relevant and customers are seeing continuous value in it. So that's what we do.
Okay, fantastic. Thank you. So for those that aren't familiar, what exactly is unemployment insurance? How does it work? What does it cover?
Yeah, I think it's a very important question because one of the issues we have in the UK is just basic awareness that such policies actually do exist. What it does is, as it says on the tin, it covers people for loss of jobs for no fault of theirs. So this is what we call technically as involuntary unemployment, which means if somebody is resigning, they're not covered. But for no fault of theirs, it have been made redundant, asked to go, etc. They're left with absolutely no income. The bills don't go away. And they have two options, well, three really. Either they can go back to parents, friends, and family, dip into their savings, or be a bit more prudent and cover themselves for these unforeseen risks. So, what unemployment insurance does is it allows people to be paid a certain sum of money when they're unemployed. And for that privilege, they pay a small premium each month. So that's what it does.
And would it cover their entire salary, or is there a cap?
Yeah, so the way the policies are designed, we usually pay up to 65%. Some policies pay up to 70, but increasingly today, 65% of gross annual or monthly income. Given most people are in that tax bracket of between 30 to 45%, it generally covers around 90% of net income. So it doesn't cover it fully, but it's almost there. Therefore, it's not a lot of gap between what they would take home and what the policy can cover them, because one of the key features of unemployment insurance is they don't pay any tax because the HMRC treats it as a benefit, and therefore there is no tax payable on it. And as a result, what they get from us will be nearly the same, slightly less though, as what the net income would be.
Okay. And who can get this cover? Is it built for employed people, self-employed, gig workers? Who is it built for?
Yeah, the way the insurers classify type of employment slightly varies from the way other people would classify. We generally classify as employed, self-employed, and contractors. So, and it kind of largely follows the way you pay tax. An employed person's national insurance is paid by the employer. For a contractor, they may have an umbrella company, they may pay themselves, etc. And for a self-employed, depending on the sole trader, again, they may pay directly or they may have a holding company through which they could be paying. So those are the three broad terms we use. The only people we generally struggle to cover are people with absolutely no consistent contracts, such as the 0 hour contract. Because one of the things that's important when you calculate loss of income is there must be continuous income. What becomes very difficult if somebody is employed for one day and then is not employed for 7, 8 days, again employed for one day. So that becomes a huge challenge in terms of understanding how much they can cover. And when it comes to a claim, understanding what claim they'll be eligible for. So barring these one or two nuances, largely everybody will be eligible to buy unemployment policy. Sometimes some insurers are more restrictive than others. Some insurers may say they would take on only full-time permanently employed, and some may say they are happy to take on contract workers and self-employed people. So it comes down ultimately to the insurer. But the product as such covers for majority of types of employment.
Okay. So the key here is a steady stream of income that they can prove to be able to claim on that if they are made redundant.
Correct. Exactly right. You're spot on. It's about the steady stream of income that's lost as a result of
Mhm.
unemployment that needs to be replaced, which is when they make a claim and then we pay the claim.
Got it. Got it. Okay. Clear. Very clear. So we all know that people don't save enough. And obviously, in the current environment, people are afraid of losing their jobs. So no income, losing a job, that is a serious risk. And we live in a time where pretty much anything and everything can be insured, but we don't find a lot of unemployment insurance providers. Why is that?
I think the market has changed in the last 2 decades. Traditionally, if you look at the UK market, the penetration of unemployment policies has always been low, and that's something I don't have an answer to as to why it is so low. But when you compare the UK market to comparable Western style economies, and I would think countries like Australia, New Zealand, Canada, one of the first things people do when they move into a job is buy an unemployment policy. That's one of the first things they do, which isn't a habit in the UK. A part of it could be attributed to just the sort of financial literacy people have when they come out of schooling. It kind of is a very fundamental approach to how people manage their lives. A lot of it comes on lifestyle, the education system, awareness. But I kind of have been increasingly looking at why is the penetration low as compared to other products, say, for example, life insurance. One big issue happens to be awareness. Not many people are, quite frankly, aware that there are such policies available that they can, for a small sum of money, cover themselves for anything such as unemployment. And as you rightly say, Kiruba, there is most people in the UK, especially now given the high inflation and the cost of living going up, genuinely struggle to have any saving. And the demands of day-to-day expenses are so high that it's for most people, if they can get by without borrowing, that itself is an achievement. And on top of that, when they lose a job and they lose a steady income, quite frankly, it is very devastating for most people. That's on the financial side, but there's also a huge emotional side. When people lose job, they also lose majority of the social circle. In many instances, colleagues become friends and you kind of hang around with them after work and so on and so forth. So that also is lost. It is generally a very soul destroying, lonely place when people lose jobs. Sitting in front of the computer, applying for jobs and so on and so forth. And and then on top of that, if they also have to worry about where is the next paycheck going to come from to pay the bills that come through the door every day, it's a very, very challenging place to be. But then if you then ask, if that's the case, why is it that the number of policies in the UK are low? A large part of it is due to awareness. And one of the things I felt very responsible to be doing as a leading provider of unemployment insurance in the UK is we should be embarking on and spreading and getting more and more people aware of this. And we've been consciously using social media and sort of other parts of the press that we can afford to access to spread this message. And we normally say you randomly pick anybody on the street and ask them, can you keep aside £1 a day? Can you keep aside £1 a day? And when things go wrong in your life, we will pay you £1,000 for 12 months.
Hmm.
The logical answer will be yes. But the reality is slightly different. And it's a divergence is an industry challenge. I don't think one person or one insurer or one business can solve it. I think it needs sustained amount of effort over some time. And then it'll become almost like second nature as it is in some other Western economies.
Okay. So if awareness is by far the biggest reason for this void in the market, so it could be said the same for, let's say, income protection insurance that pays for injury or illness. So mere like 150,000 people get these policies every year. But then if you look at it, the number of insurers trying to build an income protection for illness injury are far, far more than those trying to one with an unemployment element built in. Why does that gap exist?
I think it's there are a couple of reasons for this in my view. One is there's a historical reason. If you look at income protection, which used to be previously called private health insurance, as far as I remember, it's the friendly societies like the likes of Holloway who really started designing income protection policies. And these were started off for traveling salespeople to cover them for accident and sickness. And then they kind of came together and a friendly society got formed with no shareholders but the members and the policyholders being members, and that continues and is a quite a major part, and that has been going on for about more than 100 years now. When you look at the other side of income protection, A lot of it is actually employee benefit led.
Hmm.
So a lot of companies do offer salary replacement, income benefit when they are off work due to illness or sickness. And the group schemes generally contribute quite a lot to that number you just mentioned there. So there's a historical 100-year plus focus of people to buy private health, not private health, the PHI, which is the now called income protection, but also the group policies. And therefore, it isn't a fair comparison to say unemployment is not in the same milk because these policies haven't been around for that long.
Okay.
If at all, unemployment policies, one can argue, have been quite popular from the mid 80s onwards when sort of mortgages became the way of people's kind of buying new homes. You have to generally have a mortgage. When mortgages came, alongside mortgages came the first version of unemployment policies. And then gradually, as things went by, we started designing policies in the UK, delinking from the mortgage and actually using income as a main risk. So therefore, I think those are some of the reasons as to why even today income protection is far more prevalent as in accident and sickness as compared to unemployment. But there's one last point which you add, which I will kind of touch upon briefly, if I may. And that is unemployment policy is still kind of treated as a bit of a specialist area. There are not that many insurers, I dare say, completely understand the nuances of unemployment policies. It's still left to niche insurers or insurers looking for niche markets. It's not mainstream in the same way as pet insurance or home insurance or motor insurances. It's still niche. And I think it'll be like that for some time.
Okay, that's very interesting. Building on that, so do you think one of the reasons for this gap in the market, so even despite like some providers offering unemployment insurance and customers not getting enough of it, could it be to do with distribution? So where do people currently buy it? Does that play a role in this adoption as well?
Yeah, the at the moment the main way people get to know about unemployment insurance is either because they go and get a loan or a mortgage, and the mortgage broker would have advised them to say, "Well, you're taking on a massive loan here. What would you do if you lose job?" And that kind of triggers them. A lot of mortgage advisors do a good job in kind of suggesting, signposting. Some of them do sell, but then a lot of other customers start looking online to see where can they learn more about it. We can understand a bit more about it because something that touches their heart, saying the last thing somebody buying a new home wants is to lose it because of losing a job. And everybody knows in today's market that's a huge threat. So the way they can minimize that threat is by covering themselves. So they start looking online, and then that continues to be quite a predominant channel today. So mortgage advisors, insurance brokers, wealth advisors, pension advisors, of course, is a big channel there. But also the online traffic is quite significantly higher in proportion to, say, accident and sickness insurance, for example. And therefore, a lot of customers look at brokers or organizations who specialize in unemployment policies and tend to buy from them.
Okay, okay. So if I understand well, so you have two lines of business. So one is you manufacture these products working with a range of carriers, and you also have a unit that sells directly to consumers, be it online or on phone. When customers looking for income protection, what is it they're actually looking for? Are they worried about injury? Are they worried about illness, unemployment? How do you navigate that?
It is a very good question because you never know until you actually speak to a customer what they really mean to in their own minds as income protection. And a lot of people don't even actually type income protection.
Okay.
While it is While you would hope that's what they would, because that's what they're actually covering. Keywords like job loss insurance, redundancy insurance, that type of keywords are far more prevalent than income protection. So it really, to answer that question, it comes down to at what maturity of search is the customer doing. When they start off initially, it will be those quite long keywords around job loss. If I'm made redundant, can I cover my income? Kind of question on ChatGPT.
Mhm.
And then they understand, oh, there is something called as income protection. That's how so the buying intent is higher on income protection, but the search happens on a much wider phrase when they go to online. That's what we've seen having worked with Google and search engines for the last 15.
Is it then safe to say that people are looking for job loss insurance? They're worried about losing a job, then falling sick.
Yeah. So how do they know about it? What are the triggers for? for that search. One is, as I said, when they go and buy a new property, the mortgage advisors would have told them. The second thing is quite commonly word of mouth. It's about that little bit of an exchange in the pub saying, oh, by the way, I'm not sure what's going to happen to the economy. I've covered myself. How did you cover yourself? What do you do? Oh, you just go and Google redundant insurance, and then there are people who will advise you on that, or you can get some information on it. So word of mouth is pretty big in this. The third way people start looking for these is when there is a big change in lifestyle, like they have a kid, or they get married, and then they have other responsibilities, other people depending on them for the job, but also smaller sort of triggers such as someone buying a new car. And more importantly, if it's their first car, it's their pride and joy. They don't want to lose it come what may, and therefore they say, okay, where can I buy car insurance? The other side of searches also come from credit cards. When people kind of have a lot of outstanding on credit cards and worry about defaulting it, they start looking at credit card job loss insurance. So those are, if you like, the various ways in which people get into looking for it. But as they start understanding the subject, they start moving into looking for income protection in specific.
Okay. Okay. So clearly, then the trend is people are worried about job loss more than them falling sick or, getting disabled in an accident. So that there is that on one side. And on the other side, the big insurers cover some of the most obscure risks as well. Now, why don't we see in the market where big carriers get into this unemployment space when they can cover some of the most obscure risks in the market?
Yeah. Um, I think, in my view, it comes down to the size of market. When I say size of
Hmm.
market, is the size of gross written premiums, and then the
Hmm.
cost that's involved in managing that gross written premium. And I think that's where people like us as Best Insurance have a strength, because we are very nimble footed. We don't have huge operational costs like a big insurer, and yet we're able to carry out the function on a very low variable cost. As the market size grows and the gross written premium from it grows,
Hmm.
I'm certain that the larger insurers would want to take a look at it. Now, to
Interesting.
give you a bit of sharing some facts with you, pre-COVID, there were some insurers. During COVID, we all had to pause selling unemployment insurance. After COVID, when there was a furlough and the furlough stopped and the economy stabilized a bit, we now have a lot more insurers in the market than it was pre-pandemic. Now you're kind of seeing that the market is growing much faster than the traditional income protection. So I won't be very surprised if a friendly society who always were flying a flag of long-term income protection will suddenly say, oh, we also have unemployment cover here.
Hmm.
And in the past, people like LV did have policies for unemployment, and they would cover for 1 year, 2 years, 3 years, 5 years. Some of them linked with mortgage, but they definitely had these policies, which they pulled because of various reasons. And now that the market is maturing again and the volumes are going up, it's only a matter of time, and then you will start seeing bigger insurers coming in directly and playing in this market.
Got it. So the risk is still too big for them, and the opportunity is not as big as that. Okay. Okay. So one of the biggest challenges with any insurance, in fact, even more so with unemployment insurance, is the anti-selection. So the people most likely to buy the cover are those who feel their jobs might be at risk. How do you manage that?
Yeah, so there are a couple of ways in which we manage this. I think the first thing is, as part of the underwriting process, it is still eyeballing the applications at some stage during the process. We have tried and automated it as much as possible, and we are one of the first ones in the UK to have launched an AI driven pricing, which doesn't need any manual intervention at all. But if you look at a traditional unemployment policy, the ways we protect ourselves is by having what's called as an initial exclusion period. So whenever anybody buys a policy, the current initial exclusion period can be anywhere between 90 days to 150 days, depending on the insurer. So when I
Mhm.
buy a policy, if I'm made aware of my job being made redundant during the initial exclusion period, I will not be eligible to make a claim. So that's
Mhm.
one way the insurer safeguard. Um, the second way we safeguard is when someone's buying a policy, there are a few eligibility questions we ask. And the first one we ask is, are they aware of any sort of circumstances that may lead them to becoming unemployed? The other question we ask is, are they aware of any redundancy, restructure, financial, contractual threats in the organization they work for? So
Mhm.
we have a few eligibility questions, which are, if you like, yes, no. If they answer yes to any of these questions, they will not be eligible to buy the policy.
Right.
And the other thing is, they must be working. Someone already unemployed cannot buy this policy. They should be working. And then one or two insurers, we also have a question to say they must be continuously employed with the same employer for a period of time. That also
Hmm.
kind of does that. Yep, there is a bit of longevity here. So those are the various ways in which we protect ourselves from anti-selection. But also we constantly keep looking at um, high threat sectors, high threat sort of geographies, and we kind of have an exception list that's pretty dynamic. As the economy changes, we take a view on what sectors we can accommodate and what sectors we can't, and that's what we tend to do.
Okay. So you did mention that you have a AI-driven pricing, and some of the things you've mentioned, are they used for pricing merely to filter out the users? For example, someone who has been employed in a public sector industry with 10,000 employees and has been working with them for 6 years, is less likely to lose a job than someone who's working in a startup. So does that factor purely in underwriting to basically say yes or no, or does it also play a role in pricing?
The pricing we currently have with the insurers we work with does not take into account any of the behavioral factors. And actually, quite frankly, just not only income protection, that is true of most insurance policies. What is ultimately important is what is an individual's behavior? Because your example is a great example, public sector versus a startup. But if you look at even within public sector, there are departments that close and there are departments that have continuous
Mm.
funding. And then two individuals working within the same department may have entirely different views to respond when changes happen within government structures. Okay, let's say a certain department has a threat of being shut down because of lack of budgets, and there are two colleagues sitting next to each other. One may be proactive and start retraining for another job and be ready for those eventualities, whereas the other person could be a little bit more relaxed about it. And when a job call happens, it's the person who is well prepared generally finds another role very, very quickly. So it's a little bit more deeper. It comes down to individual behavioral traits. So none of the insurers currently do it. And we found that as a
Mhm.
big gap in terms of underwriting. And anything that we do in terms of underwriting is pretty much claims based. So we look at historical claims. So the analogy I give is like driving a car looking at the rear view mirror.
Mm.
If you don't crash, that's a miracle. But you're not designing to drive your car because in a proper way, because all the time you're looking at the rear view mirror than looking ahead. So we had to reposition the way these policies are underwritten. And then we started looking at augmented data to start predicting future behavior and future in terms of where the claims could arise and which kind of customers are more likely to be longer in claims and accordingly price on a one-to-one basis, which we believe is far fairer because in the
Mhm.
current pricing model, there is a discrimination using age as a main factor. We assume, in many instances wrongly, that older people will claim more and will be in a claim for a longer period of time, which is a which is a which is based on some historical numbers, but that is not necessarily the truth because it's quite possible that younger people may be a little bit more relaxed, don't have a sense of urgency to get back into work, living with the parents, and take longer to find a job, or probably more picky. Whereas an older person with a mortgage and two kids and a car has to find a job and would go and just get onto any other job that's reasonably, possible within a short period of time. Therefore, the existing model, and this is not just of income protection. If you drill deeper, it's the same with pet insurance, same with home insurance. The behavior, which is the real risk, is unfortunately not underwritten. It's and therefore we call it a pseudo underwriting. You look at other aspects that you believe are being influenced by the real risk, but given the complex world, increasingly complex world we live in, the correlation between those two is very, very weak. And so we pray and hope because of the number. If you have a very large book, it's unlikely that everybody would claim at the same time, and therefore you make profits.
Got it.
We want to change that from saying, look, that model is not the right model. The right model is where you underwrite each risk on its own merit, and that's what this AI pricing allows us to do.
Okay, okay, that's fantastic. So you touched a bit on the claims. So let's jump into the claim. So what is a claims process like for unemployment insurance?
A claims process for unemployment is no different to any other insurance claim. So we ask them a few questions at the time of buying a policy. We ask them to prove that. Say, what do we ask them to prove? We would want them to prove that they are working for the employer they mentioned to us at the time of buying the policy. We
Mhm.
would like to see that the salary they've mentioned to us is the salary they've been earning. we would like to make sure that the length of employment they've declared to us is the length of employment they have been at the time of being made redundant. And the address of the employer is the same as what they've declared to us at the time of buying the policy. So those are some of the bits. So therefore, what do we ask them? We ask them for things like salary slips, and we would like to see bank statements. We would like to see P45, which is the last sort of pay slip they would have got. And then one of the other conditions we have in unemployment policies is anybody making a claim should have got enrolled with job seekers and must be in receipt of job seekers allowance. So that's a check for us to make sure that they are actually actively looking for jobs. And then on top of that, we do ask them to share with us the kind of job searches they're doing to validate
Okay.
that they're actively looking for jobs and that's sort of continuing. And so it's not very complicated. It's not very onerous. These are basic fundamental documents which most customers would have. And then we obviously validate it against what they've told at the time of buying the policy and then start paying the claim.
Okay. So seems like claiming on unemployment insurance is a lot easier than an illness or an injury claim because you don't have to be chasing the doctors for reports and so on. On the other hand, how does it work to administer this on an ongoing basis? So let's take the case of a 1 year unemployment insurance. So I put in a claim, I get approved. How do you make sure that I'm doing my best looking for a job? As you said, like I might be single, I have no real incentive, I might be touring the world. Do you have checks?
Yeah, we one of the things, as I said, we rely upon is the job seekers allowance. When someone says on either universal benefits or JSA, they have a monthly sort of statement that the job seekers, the benefits office give them. And they have terms and conditions that they sign up to when they are in receipt. And one of them would be to say they are actively seeking jobs. So now that's a very serious document to be signing with the government because they're declaring that they're actively looking for jobs. And
Mhm.
contrary to a lot of perceptions people may have, we've realized that when people actually make a claim, not many people are of the mindset to go away on a holiday. That's very far and few between. Most people find it very difficult to not be in employment.
Interesting.
It's almost part of their identity that's been stolen. And they generally try very hard to get back into jobs. And you can argue saying, okay, 1 month, somebody may have a good time sitting at home and watching daytime television, but month two and month three, it becomes very difficult. And we've seen when people have a longer claims, it's probably because they just are taking time to retrain themselves to find a new job. Very rarely people would say, oh, that's a great thing. I'm going to go off on a holiday. It actually doesn't happen. In reality, most people are very conscientious, just really want to get back into work. And I think the reality is when someone is used to a certain lifestyle, the last thing they want to do is sit at home. Um,
Okay.
and therefore we find it that most people are diligently looking for jobs. In fact, we go as far as a lot of customers do ask us saying, are there any job sites that you can help me with? Are there any other areas where you think I should be applying for jobs? So they do put a lot of serious effort. Yes, I mean, is everybody like that? Probably not. There's probably a very small minority, but I must say it's a minority. Vast majority of people generally are very keen to get back into employment because that's what keeps them going.
You did mention about the COVID times, the times of crisis. Typically, around those times, you definitely do see a surge in claims. How do you handle it? How do insurers see it?
Yeah, COVID is a one-off, as the commonly used phrase unprecedented. That's what it was for us. The way it happened during COVID, most insurers stopped selling unemployment policies. In fact, we stopped
Mhm.
selling any income protection policy for almost 6 months. We then started selling accident and sickness policies with large amount of exclusion directly and indirectly related to COVID or SARS or any sort of virus. So we kind of were selling those policies, but unemployment policies took a little longer to come back, and partly because of the furlough that the government introduced at that time. What the furlough did mean was it was a big reprieve for people like us because really the number of people who were made fully unemployed was far less.
Mm.
Because a lot of people were furloughed. And in a bizarre way, the furlough also allowed us to increase the awareness for unemployment policies because the way now people understand our policies is like a private furlough. It's like going to a private GP where they pay. This is a private furlough that they pay for. So it's in fact helped us to increase the awareness of these policies.
Okay. So, because you mentioned the word furlough, do you think there is a much bigger opportunity here selling this policy to employers rather than going direct to consumers?
Yeah, yes and no. I think the practicality is if I look at myself as an employer, I may struggle to go and tell my employees, you know what, buy yourself an unemployment policy. because the first thing they're going to worry about is, why is my employer asking me to buy? Is anything going to happen with my job? Am I going to be fired? What's going wrong in this business? So I think there's a little bit of that. So employers I find are not that super keen to say go and buy an employment policies to their employees. But what may happen increasingly is you have all these social clubs, like the sports clubs, credit unions. So those are the areas where I think the awareness can be increased, because they're not employers, but they are people with common cause. And one thing they do want is, if there's a common interest group, they want people to continue to enjoy the common interest. One of the things that can stop people from enjoying is losing jobs. So therefore, there's a
Hmm.
bit of a correlation there, and therefore there is an increasing presence of insurance brokers and insurance tech startups coming into the unemployment space, focusing on these sort of clubs and partners and using technology to serve them efficiently. And I think that will increase as time goes by.
Okay. Okay. That's interesting. And one question I always have is, when we talk of income protection, so there is one in the long-term life space, and there is a type of income protection that's sold under the non-life space, and which is typically where unemployment insurance falls in. And when we talk about anything in this non-life space, people immediately relate or connect with the PPI scandal that happened years ago in the in the UK. So how do you go about breaking that down? The common misconception people have.
Increasingly, there's a very poor sort of link between the two. But when PPI was at its peak, um, there was always the worry as to what would happen to these policies. There was also concern from insurers and regulators to make sure that we are doing the right thing. So one of the things that's very unique in the UK market that doesn't exist in many other European markets, certainly not in the US, I don't think, is when someone buys a loan or a mortgage, we're not allowed to sell them income protection or mortgage protection. So the point of sale, which was the main of selling these policies with the MPPI, is now gone. So we cannot talk to them of any protection for payments or income for 14 days after the loan finishes, loan sanction, loan sort of application finishes. And therefore, that has created a um, huge mitigating factor for anything being missold. But quite frankly, there isn't anything wrong with the product.
Mhm.
What happened in the MPPI area was, it was those long multiple premiums collected in one go at the point of sale, and also not qualifying when a person buys a policy and 10 years later, when the situation and circumstances change, are they still able to make a claim, but they've already paid the premiums. So what we have done is, these are all annually reviewable policies. So unlike those MPPI policies, which are for 15 years, 20 years, these are policies that are reviewed each year. So we give customers a chance each year to review the policy. We send them the details we hold in our files, ask them to check if it's still valid. And if they moved away into being, say, for example, somebody was permanently employed when they bought the policy, for whatever reason, has chosen now to become a 0 hour contract employee, and they're not even if they forget to inform us, at the point of annual review they get alerted by us. So there is a so therefore what's happened in industry, the way it's evolved is, to begin with, the touch point where mortgage protection was sold has now been removed. The multiple premiums is no longer a practice,
Mhm.
and there's a conscious annual review each year. So when a customer goes to make a claim, there is no reason why the claim won't be honored, because we are constantly reviewing it as we go along. And therefore, I think there were some very big lessons learned in that MPPI era, and the products are now very carefully designed to make sure that those things don't reoccur. And there's a lot of regulatory oversight anyway that helps us to manage it better.
Okay. Okay. Fantastic. So I've just got one final question for you, Kesh. What is your vision for the future of unemployment cover? So if you had the same conversation 5 or 10 years from now, what do you think would have changed? And what should we have done so that there is no void in the market?
Yeah, what should have changed? I think for me, it almost begs the question, why should everybody who is in a job not have this policy? Because if you do some simple maths in terms of what's the premium, let's say somebody is buying a policy and we'll take some rough numbers, £40 premium, and pays it pays about £1,000 of cover. Simple maths will tell you that even if they continue to pay premiums for 22 years, at the end of on the 22nd year, certainly more than 20 years, make a claim, they will recoup all the money they've paid as premiums until then. So in terms of return on investment, it's one of the best ROI instruments one can ever have. So financially, it's a very sound thing for anybody getting in employment to do this. So my vision would be, if anyone getting new into employment, the new millennials, the young people in the age of 21, 22, they start seeing value in these policies. And the first thing they buy when they're in job is an unemployment policy. We have cracked where we want to be.
Fantastic. Thank you so much, Kesh. A lot of useful insights here. I'm sure everyone listening to it is going to enjoy it. And thanks for your time as well.
Thanks, Kiruba. It was a pleasure talking to you.